All right, thanks everybody. It looks like people are still logging on, but our poll's looking good. Right now, let me see. I'm gonna end the polling and I'm gonna share the results. So cash flow projections, this is where our group is looking. 28% don't even have a cash flow projection on their work plan yet. After today, I'm sure they will. The winner today is that we have thought about a cash flow projection and have not put pen to paper, so that's great. This should be really informative for you guys. And then a few people in we've drafted something, we've created something, and we're using it. So if we add that together, about 33% have taken action. So that's great to know. We are gonna launch into this today, and I've got some housekeeping. I just need to kind of just get you guys going. So let's just close that. So we want to say thank you for you guys joining this free Zoom webinar for nonprofits, something to chew on. We hope that you grabbed your lunch and you're ready to dive into your organization, COVID impacted financials, and explore the cash flow projections. Cash flow is your most important response and recovery tool. Today, we will share a nonprofit finance fund webinar to teach you how to forecast the timing of cash in and cash out of your organization. We will also walk you through a demonstration of the nonprofit finance fund cash projecting tool. You can find these resources on nff.org. Afterward, we'll have a 15 to 20 minute Q&A with our financial whiz, Lauren Ziesel. Lauren has been a member of the Community Foundation's Finance Committee for a little over a year, and she is a vice president at Alpine Bank, and she specializes in commercial lending. Thank you so much, Lauren, for joining us today.
Thanks, everyone, for joining us. I can't wait to hear the discussion.
Great. And then something new is a door prize. So one organization will win a free 2-hour consultation with Lauren. Everyone who signed up gets their name in the hat once. At the end of the webinar, we will draw a name from our lucky winners. If you ask a question, you'll get your name put in a second time. You must be present to win. So here's how you can ask a question. You can enter a question or enter any time in the chat box, and we will monitor the questions and try and get everything covered either in the chat box directly, or we will cover it live during the webinar. And if we completely run out of time, there are lots of questions. We will follow up via email. After the video, you will have a chance to raise your hand and we will unmute you and you can ask your question live. So if you're ready, we'll dig in. And guys, I really appreciate it. It looks like we have 27 attendees and we've more signed up, so they may join us. Truly appreciate you guys coming in. I know it's not a thrilling topic, but it's so important. So here we go.
Financial reports such as your organization's budget, income statement, and balance sheet provide leadership and management with important information. These financial statements alone don't tell us whether we have enough cash on hand to cover unexpected expenses, to take a new opportunity, or even to pay rent or payroll next month. For this, effective cash flow management is essential. Rigorous cash flow planning projections are necessary to manage resources in times of uncertainty and increased needs. And particularly at this moment, not just to manage through this period of response, but to project through this time and have cash to allow us to adapt and move ahead in a changing environment. Before I get started, I want to share a little bit about NFF. Nonprofit Finance Fund is a national nonprofit organization with offices in 5 locations across the country. We have been working in the social sector for 40 years with a goal of connecting money and mission. And we serve this mission in 3 main ways. We provide loans and other financing to nonprofit organizations. We provide consulting services to nonprofit organizations and funders, offering strategic advice related to financial management challenges, plus tools and webinars like this one today. and through advocacy and accessible insights, we work to lift up what we're learning on the ground through our lending and consulting work to share with others across the sector. We do all of this guided by our core values, including equity in action, which recognizes our responsibility to promote more equitable flows of money in the nonprofit sector. As the sector seeks to react to the current pandemic, nonprofits will have overlapping needs. We are simultaneously having to respond immediately to figure out how to manage the current situation, while also keeping an eye on how we can operate and sustain ourselves within COVID. And when organizations in the sector emerge from addressing the virus, many of us are realizing that we aren't going to be returning to business as usual, and we need to be able to adapt. As we reimagine our organizations and programs in a changed world, there will be no one set path because the virus's impact is being felt in different ways across organizations. But we can still approach this unforeseen situation with equity, transparency, and strategy. A nonprofit's reason for being is its mission. At each step of the way, all of the decision-making should be with what best advances the long-term mission of our organization. When we orient in this way, it frees us up to think outside of our current organizational structures, which is important right now, because we may be returning to a world that requires us to look a little different. So, board and management should be engaged in close conversations, high-level priority-setting conversations about operations and programmatic priorities and objectives at this time. Many times in the work we do with nonprofits, we often see that this becomes a true obstacle to confident decision-making, particularly decisions about cash and budget. It seems obvious, but so many times the struggles we have about making decisions, especially if the data is sitting in front of us, has to do with how clear the priorities really are. So, once you understand what your organization's goals are, whether it's about preserving the organization, supporting staff, or ensuring programs continue, having the data can support whatever difficult decisions need to happen. Holding true to your mission will guide you towards thoughtful and effective decisions in the midst of uncertainty. So, taking stock of where we are now, this moment is unlike others we've faced, and in our work, we see organizations navigating in the best ways they can given the uncertainty. And guided by our mission and priorities, there are some things we can be doing right now to equip our organizations to make vital business decisions quickly and to start planning toward the future recovery. The first thing is to understand our current situation and time frame. What is our cash position and what does our budget look like? Cash flow is a helpful tool at this moment when there is so much uncertainty. We need to have an accurate assessment of where we stand in the present in order to plot our future carefully. With that, we can then start developing our options for moving ahead. What are different scenarios we can start thinking through and planning for? What is within our control to effect to get us through this time? And lastly, we have wonderfully dedicated people who represent our stakeholders. This can be staff, volunteers, board, our funders. These are the people we need to be communicating to through financial storytelling, but also we need to be hearing from as you assess your position and weigh your options. We need all the voices at the table to give you the best picture of a situation and provide input and ideas for moving ahead. Today's webinar will focus on step 1, understanding your financial situation and time frame, knowing your cash flow, which can be tricky because so much is changing at this time. But we'll show you how to best prepare and to take these steps within this uncertain environment. Getting some visibility into low cash moments is key to addressing any cash flow challenges you might have. You can't mitigate or avoid the risk of not having cash when you need it if you can't see when that might be. So once you have some sense of when shortfalls might happen and how big they might be, then you can take steps to mitigate those risks. A cash flow projection is a financial representation of anticipated cash received and cash spent. It shows whether there will be enough cash on hand to actually pay bills at various points over the week, month, quarter, or fiscal year. By developing a visual landscape of cash flowing in and out, there will be more certainty about whether and when cash will be available to meet future operating needs when they arise. A cash flow tool can start to identify what is a cash flow versus cash issues. A cash issue means that your organization fundamentally doesn't have the resources required to deliver on your mission. Perhaps you experience a loss of funding. Whereas a cash flow issue is a timing issue. We know the cash is coming, just not yet. This is an important distinction because these two issues require very different strategies, which we'll see later. Cash is critical right now because this crisis has affected many of our ability to generate or release restricted programmatic cash. Cash is also the thing that we need to be nimble to the situation, to pay for unexpected expenses and keep staff working on programs. That's why in a time of crisis, everyone should know their cash situation. Knowing exactly how much cash you have and how much time it covers is crucial. Basically, what is your current runway? So you need to know your ability to access cash either through your internal savings, a line of credit, emergency grants, or other sources. Usually, in normal operations, your organization may be used to doing a monthly cash flow projection. But at NFF, we suggest starting with a 13-week rolling cash flow, which is updated with actuals on a weekly basis. This will ensure you always have visibility of your cash requirements for the quarter ahead to allow for plans to change as needed. And base all inflows and outflows on realistic assumptions that can be changed to update the forecast as needed. Having real-time financial information readily available can help you quickly assess your cash position and calculate those realistic projections. So, we have a budget. Isn't that enough? Well, not really. We acknowledge that cash flow projections and budgets are connected, yet different. Your budget equals your cumulative revenues and expenses for the year. It cannot identify cash flow challenges you might encounter. A cash flow projection is a separate document that forecasts the timing of cash in and out, and when you know where the peaks and valleys of your revenue and expenses are throughout the year, it can inform your response. In practice, the process looks a lot like budgeting, but because your cash position is so important, the estimates you enter into the spreadsheet must be cash figures, projections of the actual cash you expect to receive and the actual dollars you expect to pay your expenses. Therefore, cash in and cash out will not always be the same as revenue and expenses as recorded in the accrual system. Instead, it's very similar to how you would record transactions in your checkbook. Cash in is not always the same as revenue. Cash is cash, but revenue can include cash and receivables. Let me explain. Revenue, for those of you using accrual accounting, is recorded when you receive that revenue. For instance, it could be in pledge or contract form, so not necessarily when you receive the cash. You record a grant as revenue when you receive the award letter. For an organization with fee-based programming, you record revenue when you deliver the services. In both cases, you may not receive the actual cash until later, and sometimes it's several months later. So it's important to have a clear understanding of revenue, but when we're doing cash flow projections, we'll be estimating the timing of cash receipts rather than revenue. The same is true of expenses. You may spend thousands of dollars in the months leading up to a special event before you You'll notice our last point, that we call attention to the fact that restricted cash needs to be tracked separately. If you have cash on hand that must be spent for a specific purpose, we don't want to lump it into overall cash because it would mask the cash that you currently have available to spend. As mentioned earlier, as hard as it will be in uncertain times, your estimates must be honestly realistic. Use any new information to update your assumptions and the data in the document, and keep track of your assumptions with footnotes. Then, use what you see to form strategies to meet funding gaps and cut costs. So step one, what do I need to get started? Well, when building, reviewing, and using cash flow projections, there are some standard considerations no matter the situation. So typically, you would need your current budget, your year-to-date actuals and internal financial reports like your balance sheet, your most recent bank statements, and your assumptions, your development, your revenue plans. So go through the exercise of gathering and calculating the major disruptions to cash flow caused by social distancing and COVID-19. For example, are we fully operational, or do we have reduced service levels, or perhaps a pause in service delivery? Are there revenue losses from reduced service levels or funder-donor hardship? Have you received any emergency funding from government stimulus, any rapid response grants from philanthropy? Is there philanthropic revenue that funders have removed restrictions on or advanced? On the expense side, are there any increased short-term expenses, working remotely, unanticipated demand for personal protective equipment, or decreased short-term expenses due to closure or reduced service levels? So things like staffing, utilities, and program supplies. Or are there any new ongoing expenses that support you in the new norm, whether it be changes to service delivery, volume, or community needs? Now more than ever, it boils down to what cash you have coming in to cover expenses, so the details really matter, especially around your balance sheet items. Things like, how much cash do I have in the bank? And how much is actually available to cover expenses right now? What's unrestricted versus restricted? Receivables, payables, and loan terms are important. Adjust for any anticipated changes that will affect the timing and size of your payments and receipts. We're going to start with a simple model built in Excel with figures in thousands. NFF has made both a monthly and a weekly template available on our COVID resources page at our website. I want to start with the basic components of good cash flow planning. So a good cash flow planning document includes a beginning total cash balance, which we see in the top row. It shows us all of the resources that we have on hand at the beginning of each week or month. Below the beginning cash balance, you will see your cash receipts, which should line up with your budget revenue line items. Program service fees, foundation support, and other categories reflect the different ways in which cash is coming into the organization and the timing with which they come in. You should not make assumptions based on how revenue came in the past. Stay in touch with your donors and include only sources of funding you are aware of. Your ability to plan effectively depends on the accuracy of your estimates. Below the cash receipt section, you'll see cash spent. These are the ways in which the organization is using cash. Most expenses will be included here, but you'll notice that non-cash items such as depreciation or in-kind expenses are not. That's because we're only looking at real cash items. The net cash line shows the difference between cash receipts and cash that was spent, or your cash results for the given week. You'll notice 3 different net cash lines, and we'll talk more about the cash from these sources in a moment. The bottom line ending cash balance equals the beginning total cash balance plus or minus the total of all net cash activity, and shows how much cash you have left at the end of each week or month. You'll notice from the line that the ending cash balance moves up to become the beginning cash balance for the following week or month. So as a run-through, in the week of May 4th, the organization had a beginning total cash balance of $120,000 and a total net activity of $17,000 for an ending cash balance of $103,000, which becomes the beginning balance for the week of May 11th. So what about restrictions? How do restrictions impact available cash? Well, restricted revenue for time or purpose may be received as cash when a grant is awarded, but is not available to use until after the terms of the restriction are met. Net assets released from restrictions is the mechanism we use to manage that transfer from with restrictions to without restriction and account for it in our cash flow projections. Thus, cash released from restriction is cash that is released from obligations due to satisfaction of donor-imposed stipulation with respect to purpose or time that is now free to be spent. It's important to understand the funder expectations around these restricted funds and assess whether you are in a position to meet these expectations. We encourage you to speak to your funders. Many foundations are reaching out to grantees in this crisis and are loosening or lifting restrictions, as well as accelerating portions of multi-year grants in order to make resources available for ongoing operations. So, with that in mind, it's best practice to separate unrestricted and restricted cash. On this slide, the cash flow template gets a little bit more complicated, but it has all the same elements that we shared on the last page. Note that our beginning and ending total cash balance is the same as we saw earlier, but we now have more detail that allows us to see unrestricted and restricted activity separately. To start the process of separating the two, you'll see that we have added an additional line at the top of the template. We have two beginning cash balances, one for total cash that includes all cash, and now one for cash without restrictions. To allow us to track these two balances separately, we've also added a section called cash with restrictions below our original template. So let's walk through this again. Now we're showing that of the beginning $120,000 total cash, $90,000 is cash without restrictions. Then we have cash receipts for this week from foundation grants and individuals, as well as net assets released from restriction from the section below, meaning this share of restricted funds is now available for use. This gives us the total of $13,000 cash receipts without restrictions. We spent $20,000, so our net cash from operations without restrictions totals negative $7,000. You can see $90,000 minus $7,000 equals an ending cash balance without restrictions of $83,000. This becomes the beginning balance for cash without restrictions for the next week. Then, looking at cash with restrictions, we see no new restricted cash coming in, but there's the $10,000 received in a prior period and now was released from restriction to use above. To get our ending total cash, we start with our beginning total cash of $120,000 plus or minus the net activity from each section for an ending total cash balance of $103,000. And there's the beginning balance for total available cash for the next week. So what about non-operating cash? Non-operating cash is cash activity not directly related to the organization's programs or other main activities, but we include it because it's still cash that's either coming into the organization or that we have to spend, but it's for things outside of our core operations. Some examples of non-operating cash receipts include receipt of cash drawn from an organization's line of credit, the receipt of long-term debt, capital campaign contributions, and other one-time or extraordinary transactions. Examples of non-operating cash spent can include payments of debt principal and things like capital expenditures. With the COVID-19 crisis, several funding options have emerged for those seeking relief or assistance. The Federal CARES Act, and there are also community foundation relief funds being offered by the state. We suggest capturing those items as non-operating. And this will be important to show how relief, like the payroll protection plan, helps your cash flow and ultimately if your organization will need more than the relief to survive the crisis. So, like we saw with restricted cash, it's also best practice to separate our operating cash from non-operating dollars. As a nonprofit manager, you want to make sure that you understand unrestricted operating results. These are the reliable and recurring operating revenue and expenses you have, separate from non-operating dollars, or money that you receive or spend for one-time occurrences or even capital projects. So, our top line is our beginning cash balance. Again, all cash. Then we're calling out operating cash without restrictions. We have our operating cash without restrictions section below, followed by our restricted cash activity. Then below that, we now have our non-operating activity. Here we would see items such as drawing on a line of credit or long-term debt and other, which could be at this moment COVID relief funds. Other typical non-operating revenue and expenses that you could include here would be funds received to purchase capital items like new computers or vehicles, any one-time non-recurring gifts like an unexpected bequest. You'd also capture the net gain or loss from disposal of an asset and any realized gains or losses on investments. These are examples of non-operating sources and uses for the organization. So when we spend or receive money related to these sources, we would record them separately here. By putting these items in this section, the model enables the organization to differentiate between the cash sources and uses that are part of everyday operations from those that are irregular or special in nature. And as with the prior slide, to get our total cash balance, we start with our beginning total cash of $120,000 plus or minus the net activity from each section. So our net cash with operations, our net cash with restrictions, and our net non-operating cash for an ending total cash balance of $103,000. And there again is the beginning balance for total available cash for the next week. So with that, let's review our projections and our cash position. We see a negative bottom line translates into a shortage of cash. The example shows that an expected shortfall of $21,000 is looming about 6 weeks out. Under normal circumstances, cutting expenses or raising additional revenue could possibly address it. But in the current situation, this is unlikely without major hardship. Also, you can see that the $21,000 shortfall projected in June grows to a negative $151,000 by July. So, identifying trouble quickly provides you the chance to do everything possible to take measures to address it. In a time of crisis, knowing exactly how much cash you have or don't have, and what it may or may not cover in terms of near-term and emergency expenses is key. We've shown you several examples at different levels of detail, and each of you will find that a different level of detail is an appropriate place to start. The most important thing is that you start in some capacity engaging in this exercise, regardless of the level of detail you're currently employing. Before we explore our options for addressing the shortage of cash seen here, we want to do a quick review of the document to ensure we've considered all of our inputs appropriately. Here are a few of the common mistakes that we see in the field and would caution you against. You will have noticed that all of our templates have a line at the top for beginning cash balance. while you'll be able to see net inflows and outflows, not including a beginning cash balance makes it difficult to track the amount of cash you actually have each week in the same place as the flows. You'd be surprised, but we see it left off frequently. Another common mistake that we see is organizations that take an income or expense item, divide it by 12, and straight line it throughout the year. While this is a good place to start, it's important to understand and recognize the variations that you face throughout the period you are projecting. For example, utilities can vary by month or season. Also, don't straight line income and expenses just for the sake of filling out the document. It's not going to help if the numbers and the timing aren't accurate. Similarly, another common issue that we see is on not accurately estimating payroll. Organizations may not be accounting for the accurate number of weeks or pay periods in a given month. The months with 3 pay periods should have higher salary numbers than those with only 2 pay periods. So take the time to look at the number of weeks and adjust relevant expenses accordingly. The fourth point I've discussed in a good amount of detail in the previous slides, but it's worth repeating. Make sure that you separate non-operating cash from operating to get a true picture of your operations. Likewise, for those that receive restricted cash, you should consider separating it from unrestricted cash as well. It's important to remember that cash flow projections are often used at board meetings or provided to funders and lenders. The format must make cash flow and the assumptions behind the numbers transparent. At the same time, too much detail gives too much information for expedient decision making. When making decisions, you want to focus on the material items. We said at the beginning that cash flow projections focus on cash in and cash out rather than revenue and expenses. Therefore, you'll likely be receiving cash in from last year's receivables and paying cash for last year's payables in the beginning months of the year. Some organizations forget to include this in their projections, so this can throw off your numbers. So back to our options or strategies for managing cash flow and addressing our projected shortfall of cash. When thinking about extending cash, nonprofits are masters of conserving when we need to, but there are essentially 4 strategies that we use. The first is using existing cash, or we have cash. So do you have reserves? I'm including using rainy day reserves or other emergency funds. As you build projections, look at your savings and consider what that would look like to transfer a share of that to the next few weeks or months. You might have board designated funds. What is the purpose of those funds? Would the board be willing to redirect them? Or it could be asking funders to release restrictions on future funds that you're holding on to. Speak to your funder and explore the possibilities around releasing or loosening these restrictions in order to make these available for ongoing operations. For receiving cash, check in with your program officer, your major donors, and see what they're thinking about in the next few weeks or months ahead. The philanthropic community has been very responsive, releasing restrictions, lifting reporting requirements, and accelerating and advancing payments, as well as offering special granting opportunities. You could also change the timing of events and fundraising appeals. While many of your longtime supporters and grantors may be facing financial stresses of their own now, never underestimate their willingness to help if they can. There's also the potential for the conversion of funds. For example, requesting that ticket revenue from a canceled event turns into a donation. Another tried and true cash strategy is not spending cash. One thing I will say is that when making decisions about not spending cash, whether by delaying vendors or cutting costs, this is where your organizational priorities really matter. In this crisis, you need to consider the impact any delays might have on your vendors. Based on their location and size, some are often more vulnerable to slowed payment streams. Ask for discounts. Negotiate payment plans with vendors and lenders. You might be able to do so with utilities or fixed expenses like rent and insurance. You may be able to work with your landlord and your insurance agent. And banks have deferred mortgage payments for 90 days. So keep that in mind when you're negotiating. As we all know, staff is usually the biggest expense an organization has. So reducing this expense can be a really tough decision. So if you do turn to personnel expenses, a first step keeping costs down is to leave any open positions unfilled, particularly if you had future expense built in for a new position. There are many other ways to reduce payroll costs, including mandatory part-time work, progressive salary cuts where the highest paid workers take the biggest pay cuts, or leveling where everyone earns the same low salary. If you have to furlough or lay off employees, you'll need to consider the associated costs of those decisions, such as for unemployment insurance or paying out accrued vacations. You may also want to consider issues of equity and diversity and the skills that will be needed to restart the organization or certain programs. Finally, borrowing cash is an option that may be appropriate for some. Traditionally, if you need cash because your funding or government contracts are delayed but will be coming in, borrowing may be appropriate for you. This is where it's important to know whether your cash needs are from timing or true losses that are permanent. Borrowing when you have losses that don't have revenue expected to come in will only put your organization in a more difficult position. The COVID-19 situation is a unique cash and cash flow issue. So talking through that interplay and distinction with your board is important in deciding if the pursuit of debt is the right step for you. A word on the PPP loans that many are accessing. These function differently than traditional debt. Since it's potentially forgivable, if your organization is really confident that you can satisfy the conditions for forgiveness, it's functioning more as a grant than a loan. That said, you must track what you spend this money on in order to be able to apply for and maximize forgiveness. We'll talk briefly about debt in this webinar in a moment, but NFF has other webinars on when debt is appropriate, so you should look for those resources on our website if you're considering debt. So, step 6, anticipating our financing needs. In this example, the organization is spending more cash than it receives from current operations. As a result, by the week of June 15, they've used all available cash, including restricted cash, and at that point begins using its $100,000 line of credit to meet expenses through mid-July. You'll see at the bottom of this slide, captured in the non-operating section, they're showing how they plan to sustain the organization during the next few weeks where they expect to face cash flow challenges. It's a partial fix which addresses immediate challenges and buys them some time, but it doesn't solve the cash flow challenge completely. Management and the board will need to discuss if that is the right decision for the organization. What are cash management strategies that we can use to extend our available cash? What assumptions are we making about when operations may or may not resume? And what types of resources might be needed to restart operations? So this cash flow is one tool or lens into our operations. It informs the so what and the now what decisions ahead. The organization plans to draw on its line of credit in June and early July to cover these negative operating cash balances. By drawing $60,000 in June and $40,000 in July, they can get through the near-term challenging weeks. Updating with actual information at the end of each week and continuing with rigorous cash flow planning, coupled with scenario planning, will inform your options as you move forward. Showing this level of detail in a cash flow projection can help organizations use debt appropriately, communicate with stakeholders, and increase the chance that they may be eligible to receive debt from a lender. Nonprofit Finance Fund goes into this level of detail and much more with our borrowers and other consulting clients. and we highly recommend that organizations consider adopting a similar format. For organizations who have projected their cash flow for the coming year and realize periods when there are cash flow issues, you might consider accessing capital to address that timing issue. Some traditional options include lines of credit, which can afford organizations additional liquidity to mitigate shortfalls in fundraising or delays with government funding. These will have a non-use fee if the line is not used during particular times of the loan, and interest is paid monthly. Applying for credit in a crisis can be difficult. By securing a line of credit, particularly when you need it least, you can build your banking relationship and credit history. Bridge loans are used to bridge timing gaps between an organization's need to pay expenses and when it receives the actual cash payment, generally in a lump sum from a specific source. For example, a government contract, a foundation, or a corporate grant. Unlike lines of credit, for which payment is not tied to a specific source of funding, bridge loans are made to cover expenses until a particular source of funds is received. The principal repayment is required upon receipt of the cash from the contract, the grant, or event proceeds, and monthly interest payments are required, generally from the organization's operating cash flow. For organizations that are considering debt, here are some of the key opportunities and considerations. We typically see that organizations are able to access larger amounts of flexible capital through loans. However, it's important that whatever endeavor the loan is supporting results in an organization that can pay down the debt over time. Because of this dynamic, loans are not always necessarily the best option for organizations. I want to touch just briefly on a conversation with your banker, your lender, your CDFI. This conversation must be ongoing, deep, and fully transparent. And this is why cash flow, which we've just discussed, is so important. But the numbers are just one part of the conversation. Beyond the financial information, you need to be prepared to talk about the contextual information. So, what is your story? You need to talk beyond the numbers about the short and the long-term plans for the organization. Leadership that has the ability to lead through changing economic and funding environments. Make sure you understand what role your board plays. An engaged board of directors. Evidence of reporting and processes in place to measure your progress against budget and your ability to course correct. Borrowers are looking for funding commitments and contracts over the next 12 months. And also a track record of support from the community and your funders. For organizations that choose to move forward and seek a loan, they look for the qualities on the right, while lenders look for the qualities on the left. This is a partnership that requires supportive relationships, and organizations typically have more success creating these partnerships with mission-driven lenders that are accustomed to the dynamics and values of the social sector. For example, foundations and CDFIs. So relationships and roles are key in managing cash flow at this moment. As fiduciary agents of organizations, board members have the responsibility for approving the budget and monitoring the assets necessary to operate, including cash. Cash flow projections should be shared with the executive and finance committee monthly and in full board material. And during this COVID crisis, your board should be a resource for not just financial support, but to provide guidance and thought partnership. Mission strengths, what you need, should all be conversations you have with your boards, addressing sometimes difficult questions, but necessary to steward the organization through this crisis. The cash flow projection illuminates the difference between cash flow issues, which involve a temporary lack of cash due to timing of receipts, and cash issues, which involve the loss of funding that produces a cash shortage with no predictable end date. Cash issues are usually associated with an operating deficit. In other words, expenses exceed revenue, whether in cash or other forms. COVID-19 is a unique cash and cash flow issue, and talking through that interplay and distinction is important with your board. We don't really know when COVID-19 restrictions will be fully lifted, and not knowing when the economy will return to some sense of normalcy makes it extremely difficult to formulate plans. But we encourage nonprofits to try and come up with some sort of a plan for what their business might look like once the economy begins to open up again, so they can have realistic expectations for how to operate post-COVID-19 while managing expenses so that you're not overspending what little cash you might have on hand. We suggest leadership engage with staff, board, and funders in data-driven strategic conversations and work together to help you prioritize and implement alternatives that get identified. Among the hardest things for organizations to acknowledge is that it is possible that a given situation isn't solvable, that viable options might include a substantial reduction in activities or exploring restructuring opportunities. Cash flow projections lay the groundwork for planning your response to what lies ahead. Then, building realistic scenarios, what ifs, will help management and leadership respond to unpredictable situations, giving organizations a chance to be thoughtful about big decisions that need to be made quickly and under pressure. For more on that topic, tune into NFF's next webinar, Managing in and Beyond COVID-19, Budgeting and Scenario Planning. Thank you.
Hi, everybody. A lot to take in on that. Lauren, do you want to give us a little bit of feedback on that?
Sure, yes. Thank you for spending the time, everyone, to watch the video. I think the two biggest takeaways that I hope you leave with is the fact that our cash flow projections are not the same as our budget. They're not the same as our income statement. So the cash flow projections are very, very important for your organizations, especially during this time. And the second thing is that these projections should be reviewed often and updated as you continue to get more information as far as grants coming in and expenses going out. And so now the next part is a how-to guide. It's a shorter video on how to use the cash flow projection tool.
All right, hold on to your seats, everybody.
Now more than ever, rigorous cash flow planning projections are necessary to manage tight resources in times of increased need. A cash flow projection is a financial representation of anticipated cash received and cash spent. It shows whether there will be enough cash on hand to actually pay bills at various points over the fiscal year. By developing a visual landscape of cash flowing in and out, there will be more certainty about whether and when cash will be available to meet future operating needs when they arise. The ability to estimate how much cash will be available gives you a better sense of your organization's financial health and ability to tolerate risk. We hope you will find this a useful tool in projecting cash flow, either monthly over a period of 12 months, or in these challenging times, weekly over a period of 13 weeks. We'll take the next few minutes to orient you to the tool so you can begin to apply it to your organization's needs. Note that all of the instructions I share are also captured on the instructions tab in the Excel file. A few items to note. As mentioned, the spreadsheet offers two tabs, a monthly cash flow projection and a weekly cash flow projection. Input on each tab will follow the same approach, but either for a full month or for a particular week. Note that the tabs are independent of one another. Begin by entering your organization's name, the fiscal year, and your approved fiscal year budget. This will serve as a guide to the total dollars you expect to flow in and out over the year. Notice that all input happens in cells where the text is blue. Projected numbers are the cash amounts that an organization expects to receive and plans to spend in each month. Complete the spreadsheet using the suggested category for each entry. Broad categories have been suggested, and we encourage organizations to make use of them. However, additional spaces marked Other can be used when an item doesn't fit into a broad category as provided, or to customize the spreadsheet to your organization's unique requirements. You may also insert rows for additional line items. Instructions for inserting and deleting rows can be found on the Instructions tab. You can use the outline function by clicking on the numbers in the top left corner of the spreadsheet, or the plus and minus buttons located on the left axis and the top axis. This will enable you to expand and contract the spreadsheet based on the level of detail that you are interested in seeing. Finally, the tool is organized into various sections. First, operating cash without restrictions, then restricted cash, and non-operating cash. Let's populate the tool. First, enter your beginning total cash balance. Total cash includes operating cash without restrictions, non-operating cash, and restricted cash at the beginning of the month. Use rounded numbers to the nearest dollar. For this demonstration, I will enter information in thousands of dollars. In this example, we have $200,000 total cash. Next, enter the operating cash balance without restrictions. This is your total cash balance minus restricted cash. In this example, of the total cash, $100,000 is without restrictions and available for operations. Note row 6, beginning operating cash without restrictions after financing activities. There is no entry needed here. This row will ultimately reflect your beginning operating cash without restrictions, plus or minus any additional cash that is derived from financing activities, so you have a sense of the degree to which debt impacts available cash. These rows show us the resources we have on hand at the beginning of each month. Now, let's enter our activity for cash without restrictions in rows 8 through 90. Let's start with cash receipts. These cash inflow categories reflect the different ways in which cash is coming into the organization and the timing with which they come in. Beginning in row 10, you will capture operating cash receipts without restrictions. Operating cash receipts without restrictions include earned income, which is cash received in exchange for services or products. In this example, let's say program fees of $10,000. It also includes contributions, which is donated cash received whose spending is not limited by legal or contractual obligations. In this example, let's say Foundation A, $25,000. And finally, it includes cash released from restriction. Note, this line contains a formula which will be automatically populated as releases are entered in the cash with restrictions section below. Recall, earlier I described that the tool is laid out in various sections. Therefore, this activity will be captured in that section and flow automatically here. Cash released from restriction is cash that is released from obligations due to satisfaction of donor-imposed stipulation with respect to purpose or time now free to be spent. For example, maybe this is a program restricted amount where your funder lifted the restriction. Or maybe it's the portion of a multi-year grant that you're now allowed to spend. You'd release the amount that you are allowed to use. In this example, we'll release $10,000 of restricted resources, which have met their time or purpose obligation. So in this example, there's a total of $45,000 of cash receipts without restrictions due to operating activities in month 1. Next, let's enter our operating cash spent. These are the ways in which the organization is using cash. We've suggested broad categories, but you can customize as you see fit. For example, personnel. These are expenses associated with the cost of having employees, including salaries, benefits, and taxes. For this demonstration, we'll just enter a total of $15,000 this month. Professional fees. These are fees paid to third-party professionals who are not directly employed by the organization. For example, lawyers, consultants, etc. Let's enter $5,000 for this month. Occupancy. Operating costs associated with a facility, whether leased or owned. This would not include principal payments on debt, major repairs, or replacements. We'll enter $3,000 this month. All other, which we'll call support. This would capture all other items not included above. For example, program-related expenses, copies, office supplies, insurance. Let's enter $2,000 this month. And don't forget interest on debt. Any interest payments associated with long or short-term debt that you might have. So, in this example, there's a total of $25,000 cash without restrictions spent on operating activities in month 1. Row 91 reflects the net cash from operations. That is the difference between cash in and cash out. $45,000 of operating cash receipts in month 1, less $25,000 operating cash spent in month 1 equals $20,000 in net cash from operations. Rows 94 through 97 allow you to capture activity for cash with restrictions. Again, this is the area that captures any new restricted cash that is received but cannot yet be spent due to donor restrictions, as well as the restricted cash released in the period. That cash that was restricted and is now able to be spent. As noted previously, when you entered the number here in row 96, it automatically carried up to line 38 above. Row 97 reflects the net cash with restrictions. Once populated and inquiries related to cash from operations above are exhausted, organizations will better understand if they need subsidy and financing. Rows 99 through 105 allow you to capture this and other sources of non-operating cash activity. Cash which is not related to the organization's programs or other main activities, but we include it because it's still cash that's either coming into the organization or that we have to spend, but it's for things outside of our core operations. Examples of non-operating cash receipts include receipt of cash drawn from an organization's line of credit, the receipt of long-term debt, capital campaign contributions, and other one-time or extraordinary transactions. Examples of non-operating cash spent can include payments of debt principal and things like capital expenditures. Row 105 reflects the net non-operating cash. This is the total non-operating cash receipts minus non-operating cash spent. Finally, row 109 reflects the total ending cash balance, which equals beginning cash plus or minus all of the activity from your operating cash without restrictions, restricted cash, and non-operating cash. This shows how much total cash you have left at the end of the month. This then becomes your beginning total cash balance in the next month. Similarly, the operating cash without restrictions in the period reflects last month's ending balance. With the beginning balances automatically populated in rows 4 through 6, you can now enter the projected cash in and cash out in each of the subsequent months or weeks in each of the 3 sections for a full year of projected cash flow. As you progress through the year, you can type in your actual results at the end of the month or week. Actual numbers should be filled in after the month or week is finished. As you record your actual results, type over the respective projections with actual results. Change the name of the column from projected to actual. You can now make adjustments to your future projections based on more recent information you have now. An accurate projection lets management and board see if and when the organization will face cash flow shortages, so you can then have meaningful conversations about what to do. Once you understand your organization's current cash flow, it may be helpful to then plan for different scenarios. For additional resources, including NFF's scenario template, visit NFF's COVID-19 resource page. Thank you. Accurate projection lets management and row 105 reflects the net non.
Well, thanks for everybody who's still logged on and has been listening. This is not an easy thing to do for our nonprofits, but it is so important for us to take charge of our finances, look towards the future with so many unanswered questions with the pandemic and the elections and other things that are going on. We really appreciate you being here and taking the time. Lauren, do you have anything that you want to kind of go over some of the highlights that you saw from this tool and from some of the other, the webinar before that?
Sure. I think the biggest thing that you all need to know as well is after using the tool, and if there are potential shortages, you know, one of the options is to find a loan. And I get these requests a lot, and one of the biggest things that we ask for is a cash flow projection, so we can understand where you are, where you're going to need it, and then how you're going to look in the future too, because we want to make sure that your organization isn't just digging into a deeper hole. So there's a lot of things that we look at, and you know, from this cash flow tool.
Right. So if you have questions, raise your hand. I do have a question. Creating a cash flow projection takes a lot of time. At what point, in a financial sense, would you recommend a cash flow projection be done?
So I think that it's very important to do the practice often, not just now, but you should be looking at your cash flow often. A good time to do that is when your finance committee is reviewing the budget. Then you can plug in your budget into the tool and look at it from a monthly standpoint, so that, and it honestly helps you budget better too, to understand, and you know when expenses are coming through and when you're going to receive the big grants and everything. But it is something that should be reviewed not just once a year, monthly at a minimum.
Wow. So if you use a tool like the NFF showed us, that really helps you automate that.
Yes, yes. You can plug and go, but there were a few words of caution when plugging those in, because the easy thing is to divide everything by 12 and take it across the board and you have your monthly cash flow, but we know that's not the case. You have some expenses that are quarterly and some grants that come in annually, and that will help you understand and anticipate, again, where your cash position is, so you don't end up in August not knowing that now you don't have enough cash to cover payroll.
Right. So I know from a banker's perspective, it's really easy, but I think it might be worth a minute just to review. So what is the difference between net income and cash flow?
Sure, and that's a really good question, and I think it's something that a lot of organizations don't understand. And so when we look at net income, it's all of the income that you have coming into the organization, and you have all of your expenses, and you have a zero at the bottom because we're a nonprofit. But there are many items that we call balance sheet items that aren't included in the income statement. And these have a significant impact on your cash. These items can include loan payments, big expenses for equipment, you know, I worked with an organization that we had a monthly transfer to a reserve account. Well, that's not income, that's not an expense, but it affected our cash. So we had to take that into consideration when we were looking at the money coming in and the money going out. And then the other side of it too is you have your income statement, and that's for the whole year. So that's total for the whole year. And again, you can divide everything by 12 and make it make sense, but the cash flow really helps you understand when you're going to get the income in, when those expenses are expected to go out, so that you can prepare for that.
Great. Great. Well, I think our audience is shy, so I do have one other question. And that is, in the video, it was suggested asking the board and or the donors to release restrictions on funds as a solution with a cash flow shortage. Do you have other suggestions?
I think that's a really good option, because those donors believe in your organization, they believe in it, they understand that our nonprofits are struggling with not being able to hold fundraisers, and all of our community members not being able to donate. I think another way to look at it is not just the cash coming in, but the cash going out. We really have to review our expenses and see what ways we can cut, what ways we can do things differently. So we're all doing things differently right now to save some of that cash. And I think this has all taught us a lot that reserves are very, very important as well. And using those resources too, there are a lot of great local resources through local governments, even federal governments, that are supporting our nonprofits. And so looking into all those options for grants, they're out there. So you got to throw your hat into every option you can.
Great. Is there anybody on our attendees that wants to raise their hand or put a question in the chat, or I can even unmute you and you can ask live? And while we're waiting for people to think about what they might want to do, don't forget, one organization will win a free 2-hour consultation with Lauren. Everyone who signed up and gets their name in the hat, you have to be present to win. And so we'll be drawing that in just a minute. I'm going to launch a poll that's going to talk a little bit about our next session. And I think it'll be helpful to see where this group lands on what we're doing for budget and scenario planning. Before I draw that door prize, I just wanted to remind you we'll be continuing this Something to Chew On webinars twice a month through the end of the year. So this was our financial, and we have one more financial, which is budget scenarios, and then we go into other things. So September 22nd is budget and scenario planning, and then a lot of you know our good friend Denise, who is going to be a part of our October. So she's doing some really sexy ones called Reinventing Fundraising During COVID-19, Replacing Handshakes with Thumbs Up Emojis. And then on October 20th, Managing People in Pajamas, How to Successfully Build a Remote Workplace Culture. I'm going to end the poll. I think everybody's had a chance to do that and share the results so you can kind of see where we are. Looks like a lot of you have discussed the scenario plannings. This is what I anticipated, but some of you have redone 2020, about 6 of the 17 who voted and are already in 2021 planning. So I can share with you a little bit of the thinking for our scenario planning, which might help kickstart what you guys can think about before the next session. And that is, for the Community Foundation, our big variables were our 2 events. It was Making a Difference and the Durango Wine Experience. And so we did a scenario planning with missing Durango Wine Experience, missing both of our events, Wine Experience and Making a Difference, and then one scenario with both of those events happening. And so it really showed the board how much we depend on those 2 events. And we only have 2. Many of you have many more than that. and really showed where we needed to tighten the belt if we felt like this pandemic went a little bit further into the year. Just might give you something to ponder before that, before we get to the next financial scenario. So now I have my handy dandy names right here. And I guess I should look at who's here. Well, so is Valerie Sharp still on?
Yes.
So Valerie, you are the winner. You get a 2-hour session with Lauren to talk a little bit about cash flow and scenario planning. So if you guys, Valerie, if you can, yay, go ahead and we'll connect with you and we'll connect you with Lauren. I'm trying to look here, see if there was anything else that I needed to make sure I shared with you. So again, you guys, nff.org has some amazing resources for the financial side of things. And so we're only sharing 2 of the many that are on there. So I encourage you to go look around and see what other tools they might have to help you guys be as financially stable and sustainable as you can. So I think that wraps us up for today. I really appreciate you guys. This is hard work, looking at cash flow and looking at things. So I really appreciate you being here, and I appreciate you listening and taking this to your board and trying to make this a part of your financial practice. So without further ado, you guys have a great afternoon.
Thanks, everyone.
No, I was just